We're in the back half of the trading day here on Monday, and the tone has turned quietly constructive. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. The big shift this hour is coming from the rate side. According to reporting from MarkWatch, a closely watched gauge of bond market volatility has rolled over to levels that many pros would describe as an all-clear signal for equities. When the bond market calms down, it often gives stock traders permission to lean a bit more into risk, or at least stop de-risking. That helps explain why you're seeing a steadier tape into the afternoon, even after a choppy couple of months. At the same time, there's an important tension in the macro backdrop. MarketWatch Jeffrey Bartash highlights that U.S. GDP still looks surprisingly strong, despite a year of punishing tariffs, sticky inflation, and rising unemployment. The question being asked now is, can the economy really keep this pace up? Strong growth sounds good, but if it keeps inflation hotter than the Fed is comfortable with, that can put a ceiling on how far the all-clear in bonds really goes. That growth versus inflation tug-of-war is the key macro undercurrent as we head into year-end. On the upside side of the ledger, a couple of themes really popped since our last update. Consumer-facing gambling and speculative activity are front and center. A MarketWatch piece on FanDuel, DraftKings, and the broader sports betting surge points to young crypto bras as a core customer base, recycling gains from digital assets into online wagering. For traders, that's another sign that risk appetite remains alive in corners of the consumer and entertainment space, even if the broad indices don't look euphoric. Defense and space are also having a moment. Shares of Huntington Ingalls Industries, the military shipbuilder, are surging to fresh records after the U.S. Navy tapped the company to design and build a new class of small warship, according to Victor Reclatus at MarketWatch. That contract win is fueling momentum in the defense complex and reminds investors that government spending and geopolitical tensions can be powerful, idiosyncratic drivers. In orbit, space stocks are staying red-hot. AST SpaceMobile, a Starlink rival, is ripping higher again after President Trump signed an executive order aimed at ensuring American space superiority, as William Gavin reports. That's turning the whole new space group into a higher beta pocket of the market that traders are watching closely for both opportunity and headline risk. In the background, there are a couple of sleeper themes to keep an eye on. One is the US dollar. Vivian Lu Chen over at MarketWatch notes, the dollar is trying to finish a tough year with a technical golden cross, where a shorter-term moving average pushes above a longer-term one. If that dollar rebound sticks into early 2026, it could quietly pressure commodities and overseas earnings, while helping U.S. importers. It's not driving the tape this hour, but it's the kind of slow-burn shift that can reshape sector leadership down the line. Another under-the-radar angle is personal finance and tax planning as we close the year. Pieces on year-end tax moves and the reality of big lottery windfalls are trending with retail readers. They're not market movers by themselves, but they do speak to how individual households are thinking about cash flow, taxes, and risk-taking as 2025 winds down. For brokers, advisors, and fintech names, that backdrop can matter around earnings season. Into the next hour, I'll be watching whether that lower bond volatility continues to translate into steadier equity flows, and whether high-beta areas like gambling, space, and defense can hold their intraday gains into the close. Any fresh data or Fed speak that challenges the strong but slowing growth narrative could quickly jolt this relatively calm setup. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.